Hey guys, Jonathan Rose, owner, Masters in Trading. S&P is continuing to rally like it's its job. We're going to talk about the S&Ps, the Nasdaq, and the Russell in this quick video. Let's get started. Before I get going, this Saturday, 10 o'clock Central, 11 Eastern, we're going to hold our first webinar of 2020. It's the Earnings Academy. We hold an Earnings Academy webinar once every quarter. We do this 4 times a year. Earnings comes around 4 times a year. Whenever earnings come around, we trade earnings the exact same way. It's like Groundhog Day over here. So register, sign up for Earnings Academy this Saturday. If you can't make it, still register. I'll add a link in the video description, and we could always send you a recording. Everybody who comes to the Earnings Academy, I'm also going to share my favorite earnings trade right now. So back to the market. What do we have in front of us? We have 3 spreads. The 3 spreads, this one, the yellow is Nasdaq against Russell. It's this one right here, Nasdaq against Russell. The green is going to be Nasdaq against Dow. And then the blue is going to be Nasdaq S&Ps. These are all just 1 to 1. You can see highly correlated. Very good trade, highly correlated back and forth. Historically, if one gets cheap, it usually comes together. Sometimes large caps rally, sometimes small caps rally, but overall, they're pretty freaking highly correlated. Except starting around August, September, October, coincidentally, the same time the Fed started injecting not $60 billion a month, but $120 billion a month into the financial system. What's happening right now is the Nasdaq is getting way expensive relative to the other tradable indices. So what we're looking to do using this chart, once the Fed takes a break from putting all that money into the system, maybe the stock market values the global risk that's going on. Maybe the VIX will trade over 13 or 14. When that happens, Nasdaq is so freaking expensive relative to the rest of the market. Our favorite trade in the equity indices is shorting 1 Nasdaq and buying 1 Russell. Now, going back to the beginning of 2018, if you did this and just did 1 by 1, if you were in this trade on the yellow, you would be up $38,000. On the green, just a 1 lot, you would be up $26,000. And then the blue, you'd be up $18,000. If you were long a 1 lot of the spread back here. Now, we are short. Nasdaq is very expensive relative to the Russell. If this market can turn around at all, maybe even just take a breather, this spread should come crashing down. We can talk about it more on the webinar on Saturday. Again, hit the link in the video description below. I look forward to working with you. I'll see you there. Jonathan Rose, owner, Masters in Trading.